Explanation for the bearish trade that was taken today on gold. So the day started with this very big bullish momentum, but let's go on the weekly and let me tell you why I didn't believe that that would continue. So we're on the weekly, and as far as we can see, the previous months we had the market creating higher highs and higher lows, right? The thing that is really very appealing to me is that we have this big bearish momentum candle. It's true that it happened a few weeks ago, but this is actually very indicative of the fact that gold might actually really want to trade lower. We don't know exactly, but I would be more inclined into looking for bearish trades rather than looking for bullish trades. So today, when I saw this bullish run, I was really rubbing my hands for a bearish entry. Now let's go back to the weekly time frame and continue with our short little analysis. As I said, the market was making higher highs and higher lows, right? What really raises my attention from this entire bullish movement is the fact that I have this retracement from the high of this candle all the way to the low of this candle, right? So this was a bearish movement which took place in the market, and then indeed it continued to higher highs. But then what the market did, it actually really broke below this with a very big bearish candle. Now, the buyers which were able to continue this bullish trend and get the market out of this bearish retracement were the ones who entered at the opening price of this bullish candle. So we're going to put a line in there. Now we can see that this line has been touched by this candle over here with about 3 pipettes, right? So this went higher 3 pipettes than the opening price of this candle. It took liquidity and then it rejected to the downside. So besides having the buyers who entered in here trumped by these really powerful sellers, we see that the sellers, which actually took control of the market over here, are willing to take the market lower when they actually touch that line and then they reject it. So basically, this is what makes for our bearish bias for the coming weeks. Now let's move over to the daily time frame and see exactly what else the market is showing us. So again, we can see a very big bullish run, right? Continuous days, small little retracement, not that small for gold, but whatever. And then it just continues with very big bullish momentum. Continuing with bullish momentum as if it's just too good to be true. Everyone would be expecting for the market to go above this high and take the buy side liquidity from there. So when everybody is expecting for the market to go here, guess what the market is going to do? It's not going to go there. So this is exactly what we were able to see with this bullish run, which actually didn't get all the way till here. But instead, it went up just to take liquidity from this high, not from this one. And then guess what? It reverted, right? So let us take a line and mark that little high in there. So the line that I added is this purple line in here, and you can see how perfectly it touched it, and then it just went down. Now let's go on a lower time frame and see exactly why did the market did not want to go all the way till here, and why exactly did it reject from here? Actually, not necessarily this is what I want to know. I don't want to know what I have here that made the market reject from here, but what I actually want to know is what did the market create in here that made it then go lower, so that right now I know where to take a sell in case the market reaches there again, just like it did today. So if we move lower to H1 time frame, we're going to see that in here it actually created these two equal highs, this one and this one. So let's take a line and mark the highest point from them two. So we're going to mark this one because this is higher, and I marked this one with this blue line in here. Now you guys know I love to take my entries on the 1 minute chart, so let's go to the 1 minute and see exactly what formation the market made in here once it touched that line, those equal highs from the H1 time frame, and why did I take the entry. So on the 1 minute, let's go back in here. Now on my Instagram story, I said that I am smelling a bearish order block forming on the 1 minute time frame, right? Now, before having a bearish order block, you need to look for a bearish breaker, right? So the bearish breaker came into the form of this group of bearish candles, which have the body kind of like equal in size, right? And then after this, we see big bullish momentum again, right? Now we are on the 1 minute, so probably the volatility of this candle might not be that big in terms of pips, but trust me, since we're looking at the 1 minute, and if you were to compare the size of the body of this candle with the previous 10 candles, let's say like this one, this one, this one, this one, and so on, this would actually be the biggest one, right? So this is very volatile in terms of, size of the body. So currently, the group of bearish candles, right, prior to this big bullish momentum move up, this is a bullish order block. What happens with a bullish order block when it gets broken to the downside, like it did in here, right, with this move? It turns into a bearish breaker. So let's take a rectangle and mark that bearish breaker. The bearish breaker would roughly look like this, right? So I tried to cover as much as possible the bodies, right? From the body of the first candle till the body of the last candle. Now, when this bullish order block got broken to the downside with this candle, it actually turned into a bearish breaker. So basically, this is right now a break in market structure. What happens after a bearish breaker is created? We also see the bearish order block, right? So bullish candle before the move to the downside, which makes a break in the market structure. The way that the bearish order block is marked is from the opening of the candle till the middle point of its body. That would roughly be around here. Now, I've marked that range of that bearish order block with this orange rectangle, and as you can see, we had multiple attempts to move higher, but the market couldn't. And I know you're going to say that this is a 1-minute chart and it's really noise and it's really not that important, but trust me, to take a move of 200 pips in just a few minutes from a 1-minute entry, you would be crazy to say that this is noise. It's true. You are right to consider it noise if you use the wrong strategy, if you look at the wrong people online, on YouTube, on Instagram, or God knows where. But if you just follow a good set of rules, then it is impossible for you to see the 1-minute chart as being noise. In fact, when you use the right strategy and the right rules, you will see the 1-minute chart as a great opportunity to enter a great trade with the smallest drawdown that you can think of. The entry trigger for me for this trade was the fact that I saw the bearish breaker, the bearish order block, and the fact that the market had created multiple rejection wicks in here inside this bearish order block, and the fact that it created a bearish engulfing candles. You guys know that I love to trade bearish engulfing candles. I take them as my entry signals in like more than 95% of the trades that I take. So if you ever believe that an engulfing candle is something that it just doesn't deserve your attention, think again. The trade was taken when this candle was trading. So after I saw the bearish engulfing candle closing at this point in here, I actually entered the trade. And in a few seconds, when the market just whipsawed up and down, within that minute, it actually opened my trade in here, as you can see. And the drawdown, so from 1830.74 till 1831.24, so it was around a 5 pips drawdown. If you also count the spread of my broker, which is usually around 3 pips for gold, that would be less than 10 pips drawdown. But to have a drawdown of 10 pips or less than 10 pips, including the spread, and to take this entire move, oh my God, trust me, I live for this. Right now, I have a runner going, right, in here with 0.10. I can't close anything from this position because my broker does not allow me to open or to close trades that are less than micro lots. So I cannot trade, less than mini lots, right? So I cannot trade micro lots like 0.01. So I'll just have to leave this as a runner with stop loss at break even or slightly lower, and I'll just see where it goes. To be honest with you, I think that gold will want to visit these equal highs in here, but I'm not expecting that it's going to do this like today or tomorrow. As you can see in here, we are on the daily chart, and I'm sure that it's going to take a few weeks, if not even a few months, until we're going to see the price reaching to these equal lows. But who knows, perhaps I just got to the best trade of my life, and it's just going to trade all the way till here. I think that's going to be around 10,000 pips. I'm not sure, but that's just crazy. So to show you more about the profits that were made today, so if I go in here, right, I'm on today. So these are the 2 trades that I had taken. So almost 10K for like 1 day of trading, and I went to the beach today, right? So I took this trade actually while I was at the beach chilling. So you see, this is what's great about trading and the reason why I love trading. So this is why I'm drawing these hearts in here, because I just love trading because it offers me the freedom to do it from anywhere. I hope you guys enjoyed this video as much as I love doing it. Make sure to like this video if you liked it. Tell me in the comments down below if you find that these methods are sound and clear, and I don't know, if you have questions, I'm really eager to answer those questions to you. Okay, bye guys.